What would you say if I can get you a $600,000 house with $10,000 down? Would you buy it? For real. I can get that done. I can get it done on 2 different houses actually right now. So that's the kind of market that we're in, folks. Amazing. Do you guys know what I'm talking about?
Yeah, for sure.
Oh, yeah, I know, right? Yeah, isn't that crazy, right? People say, ooh, it's a bad time to buy. I'm seeing more deal making than I have in 10 years right now, my friends. But I'm not here to convince you that it's time to buy. I'm here right now with my friends, Genesis and Erik, to talk about creative ways of financing. And there's a lot of ways to get this done. And so we thought we'd brainstorm, give you guys an education about what's happening in the market and the cool deals that you can get with creative, out-of-the-box financing. So let's talk.
Absolutely. Yeah, I mean, you said deals, right? It is. Earlier this year, we were all going through our office and giving predictions out back in March or April. And my big prediction for this year and going into next year, 2024, the first one I gave 5 predictions. But the first one was all about, I think, because of you're going to see a continuing increase in interest rates, you're going to see affordability, and actually a lot of banks don't even have money to lend right now. There's a lot of issues in the financial industry.
Hold on. He's making a lot of statements that you may not think about. We think about it all the time because we're in the business. So hold on. Slow your roll for just 1 second. Let's back it up, okay? Because you made like 10 different statements that the public may not even be fully aware of what you're saying. So we're here to help people become more knowledgeable. So let's back up. Let's take apart this statement. The last one that he said was relative to lending. You said there's not a lot of banks lending now.
Yeah.
Is that what you just said? Did I paraphrase that correctly?
That's exactly what I said. Yeah.
Okay. Tell the public why that is, because they probably don't know that.
Well, there's a couple different reasons, and you'll get answers from everyone, but banks like liquidity, right? It's liquidity. What I mean by that is liquid cash. How much cash at any time does a bank have to issue, right? And right now it's not a lot. And there's 2 reasons for this. One, deposits are down. Oh, there's actually a couple of reasons. Deposits are down, right? Think about how much cash that you have. Maybe you're doing well. Maybe you're rich in cash, right? But a lot of people, their pocket's a little bit tighter. They're not. They're taking more out of their savings, depleting savings. We're seeing that trend across America. That takes away cash that banks have. Another thing is banks get money when loans are paid off. Well, what happens when there's a bunch of loans at 2%, 3%, 4% interest that no one wants to pay off? Well, banks don't get that money back. The other issue is, this is a little bit more complex, so I won't really delve in this, but basically you have, with interest rates going up, the risk-free rate. Basically, long story short, without getting too technical on this, I have a different podcast that we could go into that on, but basically bonds and banks' portfolios are all devalued, and banks on their balance sheets have taken huge hits and don't have actually all the cash available that they thought they did. Most of the public doesn't know that. So banks in general are having issues even withdrawing their own cash. Like it says that, hey, we have $80 billion on the books. Well, a lot of them probably only have $55 billion, which is crazy. I mean, that sounds like a crisis, right? Don't get scared, but it's just what we haven't really felt that yet. It's so banks in general and different lenders are having issues issuing new loans because of this whole slew of issues.
Okay, I think that's a good rundown. I appreciate you talking about that. Let's talk about lending for a second. We're going to go to a lending spotlight to talk to you about latest trends in home lending. We'll be right back.
NFM Lending, an easy, predictable, reliable home loan experience.
Welcome back. Thank you to our lender who sponsored this podcast. All right, let's come back to the lending front. All right, let's think about this. I like where you're heading with this, and it's a good depiction of what's happening with potential lending scenarios. What I'm also seeing from an investor perspective is hard money loans where you might be able to extend, people that do flips, and you could extend those hard money loans because why not? There was money available. Well, we have many clients, right, that are seeing those notes not being extended and being called.
Yeah.
Called. And if you don't know what called means, means they're basically calling that note due and payable. Like, we are not extending. You need to pay that note off. Your deadline is X. Get it done or else.
Yeah.
Okay, so you want to talk about people scrambling. They thought that they had a long time to basically leverage onto these notes, and now they don't have as long as they thought. So anyway, that's another phenomenon that we're seeing. So be careful with hard money is the secondary sort of like note here. Traditional lending is a little bit tighter, but even hard money is taking a hit. Even if you can get it, it's high interest. But know that your due and payables could be quite harsh. It's a hard stop, you know.
Yeah.
Okay, so let's get on to the task at hand, shall we?
Let's do it.
Because we only have so much time.
Only so much time.
And we're here to talk about creative lending, not the lack of lending, but the creative lending. So the creative lending is basically due in part to the lack of funding. I mean, that's just easy, right? Or people that can't cash out of a property want to cash out and are like, hey, somebody take this off of my hands. I need to be done with this and move on with my life. So, Genesis, you've had the opportunity to get involved in some very creative financing deals.
Yes.
Okay. Please do tell what you've been able to accomplish.
So this happened back in March, before we started, feeling a lot of the tightness in the market in terms of financing. So it was a little earlier than that. So I had a client who had purchased a home. Things didn't go as planned. She got offered her dream job out of state, and she pretty much needed just to let go of this property, and she needed to do it quickly. She was able to find an opportunity to release that property pretty much to me, without, I guess, me having the note under my name. So in theory, it was kind of a seller finance deal where she holds the note. I was able to have partial ownership in the property, and I paid the loan servicer directly. And was able to, pay the mortgage with her locked in rate. And then within 2 years, I will be able to refinance and assume the full loan under my name and the full ownership of the property.
Okay, that's pretty awesome, right? So, is that your first piece of real estate that you've acquired? That's
yes.
pretty cool. Okay, so kudos to you for being able to do that. Huge win. So, for the audience's sake, right? Because you were involved, you knew exactly what was happening. Mm-hmm. How difficult of a process was that?
So I had a really good team on my side of attorneys. So, if you're going to be going into a creative deal like this, you need to make sure you have a good team of attorneys, a mentor, anything, to run this whole process by, because you don't want to get, stuck in a strange legal situation.
Yeah. Nobody likes strange in lending or getting yourself involved in strange things in general. Sometimes that can be fun, but not when it comes to buying a property, right?
Yep. Yeah. So in terms of the process, it took about maybe 2 to 3 weeks in full to.
That's fast.
Yeah, it was pretty quick. It didn't take, the full 30 to 45 days like it would with traditional lending. But again, I did have, the proper guidance and resources to, pull it off in a way that was safe, creative, and got it done very quickly, painless. The seller was able to move on and has no issue with, having to come back and worry about the property at all. And I'm able to, pretty much feel like I have full ownership of the property and do whatever I'd like with the property.
Okay. Well, that's great. And so you got the property. Did you pay market value for it?
So I paid. So do you mean like
the sales price?
Sales price? Yeah, I did pay.
You paid market value, like what it was going for in the market, like what it would bring.
Yes.
Mm-hmm. So in that case, like, correct me if I'm wrong, the value equated to really kind of like a net wash. Like, this person was not going to make any money. They actually would probably have to come to closing with cash, right, in that instance?
Yeah, they would have been in the negative had they gone to market and tried to sell it traditionally.
Yes. So that's just a side note that I really want to highlight here, is that if you're going to do a creative finance deal, you can't have it all ways typically. You can't have an amazing price and an amazing term and amazing, like, no cash in or hardly any cash in and a great rate. You can't have it all those ways unless you're an investor who's, going to leverage some other asset typically. But for the average person who's probably listening to this, you have to be pretty realistic, right, with what you're going to ask for, because you're getting the benefit of what you just described as a cash flow vehicle for yourself or a home, depending on what you're going to do with it. And that's pretty sweet.
Out of curiosity, what was the, are you comfortable sharing what the interest rate was on that note that you've taken over?
That one was 6.29.
Okay, got it. And then you took that over in March?
Correct.
And then versus at the time when interest rates were, about a point higher on average?
Yeah.
Very interesting.
Right. So, I mean, a huge win.
So basically the sellers were able to let go, move on from their property, actually pocket some cash up right then and there, not have to worry about this. You had your name added to title, I'm pretty sure. And then all of a sudden you have a better interest rate at market value. So that's the savings of maybe a couple $100 a month versus what you would have done, plus all the additional closing costs that you would have had if you had gone the traditional way. That's what keeps this market going, in my opinion. Yeah, those deals are, because that deal would have never happened. That would have been a transaction if you weren't here, or if we weren't here, that would have never occurred. And those sellers would have been trapped in that same position or have been negative. That's a win-win.
Yeah, right. They might have even lost that house.
Yeah.
That was a real consideration for them because they didn't have the means to basically come up out of pocket to close. I think they had borrowed money from maybe a family member or something like that. Yeah. So yeah, it is creating a win-win. You win, they won. We have a deal that's made, and I think that's the huge benefit. I think just in terms of looking at a market and looking at opportunity, there's ways to make things happen in our market, and we have to figure out what's that look like, and where do these opportunities lie. And I think there's tons and tons of them around. So we're going to go to a break. We're going to go to our sponsor, who is an attorney firm who can help you do these kinds of things. So join us. We'll come right back and go on to our next topic.
I'm Chris Boss with Boss Law. If you're dealing with significant debt, call me. The average U.S. household has nearly $10,000 in credit card debt. To make matters worse, the average interest rate is over 15%. So if you pay only the minimum payment on that debt, it'll take you 32 years to pay off that credit card. If you owe money and feel like there's no way out, call Boss Law for a free consultation and let me help free you from the burden of financial debt.
Okay, welcome back.
Yes.
So, on to our next topic.
Absolutely.
So I think, I said you were next, but I'm going to go to Genesis because I think the average ladies first. Ladies first. I'm sorry.
Typical, Lisa.
It's two women against one man. I'm sorry. Ladies first. Anyway. So here's the deal. So I think the average person, right, is not always understanding how to get this done. And the cool part about being an agent is that you don't have to know how to get it done. If you're out there and you're listening, you're like, oh, I like that idea, I like that concept, I want to know more. All you need to do is call these guys. They can totally hook you up and get you in the know about how to do any of these things. So here's the thing. Lead us through an example, Genesis. How do you find these deals? What are you looking for as an agent who's going to help someone?
Yeah. So usually these deals are, it's not like you can find them really easily. You have to kind of
Zillow, Redfin, Realtor.com doesn't have those, just FYI. It's not like a blinking signal buy me, I'm special. No, the specialness is sitting right here in this room and within the brokerage. Very talented people who can figure this out and can find the blinking light because they actually can see the invisible light. Go for it.
So step one, hire me.
Yes.
So I have found these deals. I'm also a property manager. So I've seen it where sellers have kind of gotten winded in trying to sell their property. So I
love that term. Gotten winded.
Yeah.
They're just out of gas or
yeah,
what?
They're
they
just
an inhaler, they're just
they just don't want to deal with the process. They're, accruing too many holding costs. They're just ready to make something off of this property instead of just, bleeding cash. So a lot of the times they'll transition to doing a rental instead of a sale. And I've had it where I've had clients looking for a rental and they find an opportunity where, it was originally on market as a for sale. And we offer, or we ask, if you don't ask, you won't receive. So you just ask, are they still wanting to sell? Can we do a seller financing? If you're not in the position to do a conventional finance deal, you can transition to a seller finance deal. And a lot of the times they will entertain that because originally that was what they wanted, was to, rid the property from their name. They don't want to hold it. They'd rather not deal with the management costs, the tenant management and all of that. So that's one way I found some, creative deals. Another way.
I'm just laughing because she literally, we have a group chat and Genesis will be, because she works late at night sometimes, and she'll just be sending in, look at this, guys, I think this is it. And she just goes through so thoroughly and is reaching out to people because she just notices and picks up on properties that have particularly either fallen off market, that are on market, that are struggling either as rentals or for sales, and is piecing these things together. But it's a lot of combing through. I mean, you're going through what? A couple hundred properties, at least a couple dozen, and then reaching out to at least 15, 20 people before you even get a hit. And then you're needing 10 hits before we even get to the point of a deal. I mean, it's just from looking at some of the numbers that you've shown me. It's a lot of work.
It is a lot of work.
Jinx. It is not easy, but I mean, it's worth it because right now, especially in this market, a lot of people have kind of gotten to a point where they just think buying is not possible if you can't do it with a conventional loan. But that's not necessarily true. If you have someone that's looking for those deals and looking out for you, there are ways to make it possible and make you achieve those goals without breaking the bank and, not getting everything that you want in your home.
Yeah. And I think something that is sort of along the same line, not necessarily the investor side of things where you're coming through listings that might, someone might consider a seller finance deal if they're an investor. But here's the thing that people don't know is that FHA and VA loans are assumable.
Yeah.
Okay. Conventional loans are not, but VA and FHA loans are. We have ways to get an FHA and VA loan information. And so we can target those. You guys can target those with clients. So we could help you assume those loans. That is a huge, huge win because some of those loans are sitting at 2.5%, 3%, 4%. That is a huge win that you don't always think about.
It's huge.
If you can't afford 8%, you know what? Perhaps we can get you an assumable loan to get you into that property and take over. Maybe the seller still holds that paper, maybe they don't. But anyway, there's other ways to get this done. So I guess I'll just add on to your idea and non-investor route. But there's a lot of loans that are sitting out there like that. So yeah, I think that's a great example. So thank you for that. If you have any questions about how to get that done, this looks like your expert right here because she combs through hundreds and hundreds of listings. Okay, so Erik.
Yes.
On to another type.
Yeah. This is something, the term that's very colloquial is rent to own, right? Everyone loves rent to own things. I can go ahead and start as a rental. I don't have the same commitment or the same capital requirements. I don't have to bring as much cash to the table up front, but I can end up owning some type of object. In this case, we're talking about real estate. And, that's something that we've seen. I've seen that in a couple different fronts. And there's two main ways people do this. And not to get too technical, the two words, it's lease purchase and lease option. They're two different kinds of things, but it's fascinating because really there's two ways. And what I mean by that is what I'm basically doing is when I'm basically signing a lease agreement as a buyer, or you would be, with a seller. And under X conditions, you're going to preset a purchase price. You're going to preset terms. You're going to have a contract for sale and purchase, just a regular as-is contract that you're going to attach to this, and a lease. But you're going to have this other document that basically binds it together upon X terms. Often that's tenant not defaulting on their payments, being on time. Often you're going to put down some type of non-refundable down payment. But over time, if you're, these terms get very, very creative and very flexible. But over time, if you're basically a good tenant, you're making your payments, and you're responsible, you will end up purchasing the property and acquiring the property at the terms that you set up front, which can be very advantageous. And one of the things in particular, too, is it's much easier to get in. Because let's say you're a tenant, right? There are lots of people in this area. We talk about the gig economy, right? The gig economy. Are you familiar with this?
No.
Oh, really? Basically, it's think about all the people that make a killing working in things like Uber. They have their own startup businesses. Look, we got some people coming in right now talking about startups. But you have particularly entrepreneurs. It's we found that the millennial generation and Gen Z is the most entrepreneurial generation of all time in American history, which I found hard to believe. Because of that, you have people. I mean, I'm serious. No, but it's,
we could do a whole thing on that. But
no. Not in a bad way. It's just fascinating, right? But then you have all these people that don't have regular. Their tax returns probably look a little bit different, or they don't qualify for conventional lending in the same way. So this kind of leads to this weird option, but they look great as a tenant. Genesis as a property manager can say you have some of these people that have great incomes, that are dependable, that have great credit. A lender's going to look at them and say, I just can't. You don't have 2 years of whatever. I can't do this. Genesis as a property manager said, I take those guys all day. Mm-hmm. What happens is you go in through these agreements, and that lease basically kind of becomes depending on how you phrase it, kind of like a mortgage payment. As long as you're on top of it, eventually you can end up with property ownership at great terms in a way that's, again, really creative and doesn't have the same requirements up front. These things are very fast to close. I mean, it's 2 weeks. The only thing is you're going to have to eventually close on the property in a traditional format. Often you'll probably take on a loan and you'll go through another process, probably about 30 to 40 days, a couple of years down the line. But these are solutions, in my opinion, that provide a lot of opportunity for buyers that would have not otherwise been able to be part of the market and transacting in the real estate market, but now have the opportunity to via these like lease purchase and lease option agreements.
Yeah. I couldn't agree more. And by the way, we have 2 companies that we work with that do this formally. Like they have a huge bank account. They fund these types of lease option, lease purchase agreements. So the funding is readily available for that type of buy. And you can see it in an investor, smaller investors sort of scenario. So, I mean, I love it. So here's the thing. Thank you both for coming. I appreciate it so much. If you want to know more about how to get a sweet deal, how to get some investor sort of like